So on this video, we're going to follow on from the Flux News show, and myself and Harry talked about a trade idea that we want to follow up with on this video. So this is about the diesel future that we wanted to short, or the diesel outright price. So I've got Harry and Tom here from Onyx Markets to discuss this. So I guess, yeah, just to follow up on, or just to go over again the summary of what we were saying. Basically, the oil market is flashing warning signs, right? You've got a refinery margin market that was probably the biggest strength indicator of the crude market. That looks like it could be waning because it's held up by the fuel oil market that seems to be a bit unsustainably strong, and on the backdrop of heavy crudes not being as tight as they were. So there's not like a huge amount of justification for the prices to sustain where they are. And then you've also got gasoline starting to weaken, which is kind of like the big white hope, if you like, of the oil market. So if that's starting to weaken and everything else could kind of compress, that's that story. And also the refinery margins are looking a lot weaker if you kind of fast forward a couple months or beyond summer at least. And the final thing, I guess, is that actually the technical layup and the kind of relief rallies we've had are looking like the outright prices in Brent, and therefore outright prices kind of linked quite strongly to gasoil, kind of weakening, looking like they're exhausted, right? And so therefore... we felt like the weak flat price and a weak distillate crack felt like, in the sort of vein of selling the thing that you think is going to come off the most, then yeah, the diesel flat price or the gasoil future we feel like is the best one to short. And an interesting one to follow as well. It is, right. So basically we're talking about... quite a vanilla trade here, but I think you have to say that because we've had a pretty decent rally off the back of the OPEC meeting that people were kind of max bearish going into, and the China tariff situation, the relief rally we've had makes this a contrarian trade, I think you have to say. So this makes it slightly different to trade ideas we've suggested in the past and setups we've suggested in the past, whereas you want to be a bit careful with contrarian trades, right? You don't just want to pile in. Different dynamics for different contracts, but certainly a liquid outright price like this gasoil future, you want to be basically taking your time with it, because you can't exactly know when the top is going to be, right? The whole point is you're fighting a trend, and like the reverse, that's where the catching a falling knife saying comes from. You don't know when it's going to happen. You don't know when it's going to reach its high or reach its low, in this case a high. So what do? We're going to start with, give yourselves as many chances as catching this turn as possible. Yeah, exactly. And so, you want to have a good split up of your capital. So on a flat price trade, I mean, you might even want to sort of give yourself 3 or 4 goes at getting in. So should we say, $1,000, let's say arbitrarily we're starting with, you want basically 4 goes at entering with a $250 drawdown, basically is what we'd say, right? So what do we think in terms of the levels, in terms of stops? What could be the initial stop and reverse engineer the size that way? Well, let's see. So if I zoom out on this chart here, I mean, you've got a recent high of around 622, and then a sort of further back high at the end of April, around 630. So definitely the recent high as a stop, which is this is around sort of 622, 623. That would be very considered. I guess because we're thinking of a turn here, and I think because it is contrarian, we want to be stopping out relatively quickly if we're quotation marks wrong, right? So I think we can afford a tighter stop. For given it's 4 goes at this. So so we should say probably more like maybe last week's high, so kind of like 620 would make sense. Yeah, around 620. So that's $6 per metric ton. So then if we are, that's like, let's say a $6 stop, and $250 would be roughly $40 40 metric tons. That's your position size initially. So we're going to sell that, get stopped out of it 620, basically go again arbitrarily, right? Ultimately pick a time where you think it's leveled out again and go for it again, another 40 metric tons, and you're going to have 4 goes at it. So obviously if every time you get stopped out, that's the end of your trade. But if it's turning, you should capture one of those. So what do we consider turning if we get a level from there? So we sell 614, let's say, and or something around there. We're looking, if we got a tight stop of $6, we probably need to see like a $12 rally, maybe. Yeah, I was going to say you want maybe like a 2-to-1 initial move. Right. Okay. So that would bring us down to what? Sorry, so 12 metric tons. About around 603. 603. And then that's when you're kind of in the meat of the trend, and that's where you want to kind of put the bulk of your size on, get like the real size on. So we've actually got $1,000 to risk here. So we've risked only 250, and if we get it on the first go, if we catch the 10 on the first go and we capture this $12, then you're making $500. But so you've got $500 plus the initial thousands. Now you've got $1,500 to risk on that new entry, which will be the bulk of the trade. So if we do the same maths there, and we probably want to move the stop to probably entry price actually. So getting back to the stop around, let's call it 615.
Yep.
And let's say that's now a $12 stop.
Yep.
That you've got a $12 stop for $1,500.
You can add additional volume to get your total size to 125 tons.
Yeah. So that's right. What's that? 60, 70, 80, 85, right? 85 metric tons. And we'll put all this like in a nice like graphic or whatever. But yeah, and then now you've got the size on to kind of carry that trend. And again, this is at the point where like you start to zoom out and think we're probably looking at a 2 to 3 week time period initially. Yeah. If you really believe in this as like a super long-term trade, for, let's say even like the rest of the year, then you should expect a pretty decent move, and you could probably have multiple scale-ins from here. But I think for the sake of what we were talking about, I think we want to kind of see off the recent lows that we got to, like peak uncertainty around OPEC. Yeah. So that kind of level is where?
Yeah. So you've got some recent resistance at 600, but that's like more very recent. But like zooming out a little bit on the screen, you've got some a low point at 580.
Yeah.
And then again at around 575. But yeah, I mean that's. Yeah, 575 is your sort of recent low.
So that would be a good time to kind of, you're well on the way to be pricing in that your view, and you're kind of running your winner from there. So if we're looking at, roughly speaking, what is the average entry price at that point, I guess? So the average entry is going to be, roughly like, let's say 605, 607, that kind of range. Yep. So you're making, you're looking to make like 30, maybe 30 to 40 dollars per metric ton as like your initial profit target, right? That's fair.
Yeah.
And then you're probably looking to either run your winner and start to move down your stop, quite like ratchet it down to maybe the weekly high or some kind of ratchet down and run it outright, or you could take half off and run it that way. It's kind of up to you. But I would probably say with a move like this, given we've been flirting with like a bearish market for a while and there's been all this volatility, if we genuinely are bringing supply back incrementally, the refinery margins start to collapse, we should be breaking at least the recent lows, and then we should be going on a bit of a trend here that could last like quite some time. And like we keep mentioning, the markets are always in a state of overbought, oversold, so you want to get into that oversold territory. And remember, there was a big consumer based buying spree last time we had dipped around below 60 on Brent crude. So we're getting back to that. They've probably done their buying. I wouldn't say there's a huge amount more to come in, but there will be some support. But if you're going to wait for that to break, then it could keep trending quite.
And you can always really ratchet your stop tight if you feel like that flow might come back into the market, to not kind of lose much of like the gains. If you feel like it's getting that sort of like inflection point, you can always just ratchet your stop tight just to make sure that you don't, that you're still in the trade, you've still got the opportunity to run the winner, but you're not kind of just sacrificing everything like on the move back up, basically, if you feel like it might happen.
But I would say on balance, and we've had that rally, right? There's something else to take out the fact that, the relief rallies we've had, it's just a temporary blip, let's say. The hypothesis is it's a temporary blip on a long-term bearish move. So you do want to be riding that out, I would say.
So actually, maybe not tightening the stop, but maybe actually keeping a wider stop. So if you see that as noise, Right,
exactly. And I think you will get something. And then you let that kind of die out and break, and then you should really break, I would hypothesize. So then you're heading towards maybe even like, 500s, that kind of stuff and beyond. So you don't want to be guessing and being too arbitrary about it. You want to stack the probabilities in your favor. So get that initial profit target locked in, see out a bit of resistance, maybe a bit of volatility around there. And then if you keep your stop wide, like you say, and then see that next move, then I think you're just about nice, clean, bringing your stop in every day, increasingly. And then hopefully the trend is long enough and your stops moving down slow enough that you're capturing a long-term move there. And then as the volatility like weakens or lowers, as the move lowers and the standard deviation lowers, you're probably getting a good indication that you come to the end of that kind of that sell-off. And that's when you could start really like aggressively ratcheting down, or even just like picking a moment that you feel is a healthy profit target, which if you're capturing a contrarian move and you're scaling in and you're capturing what we're talking about, I mean, you're looking at getting into basically a like a 5-to-1 trade at least, right?
Yeah.
Maybe a bit more. And as I said, there are scaling opportunities there. You could look at that resistance point of the recent low or this year's low, get some kind of consumer strength temporarily coming in, and if that does break, like the hypothesis does come through, there's probably quite a good time of scaling as well, depending on how high conviction you are and if you think this is a long-term trade. So yeah, that would be the end of that. So Tom, we haven't really involved you much, but this you understand what we're getting on with the whole contrarian trending, And what would you say, like in a trade setup like this, particularly for retail traders? Is this unusual, this kind of setup, or is?
No, I don't think so. I think, you know, historically retail have quite liked to take these contrarian positions, but I think like you mentioned, that the most important thing is kind of keeping to that discipline and just, you know, giving yourself multiple goes at it, because, you know, if you're counter trending, in all likelihood you're going to be bloody lucky if you pick the top, aren't you? So
on your first go.
Yeah, exactly. So, you know, give yourself plenty of goes at it. And, you know, if it doesn't work out first time, just, you know, make sure you're sticking to that stop level, keeping that discipline.
Stopping out quick, and then always knowing that you can get back into it. Like,
exactly, yeah, not being tempted to kind of move the stop higher up.
Yeah.
Okay. And on the way down as well, probably the hardest thing for all traders is seeing it all the way through, right? Running your winner.
Yeah, exactly. Because I think you've often got a lot more conviction when you enter a trade, but picking that exit point once you've been proved right is really difficult. Yeah. And, you know, I think, you know, sort of emotionally, it's quite easy to just think, great, I'll bank that straight away. And then quite often, you know, you end up not capitalizing on you know, the full extent of the gain. So yeah, I think, you know, you can use a take profit, but I think, like you say, just keep ratcheting that stop down. That's the best way to make the most out of the move. But probably, you know, move it down every day, but, you know, keep a fairly broad distance to kind of, you know, protect yourself from any kind of intraday noise. So maybe like keeping your stop, I don't know, $15-20 higher, but, you know, moving it down every day.
Or at least moving it down with every move down, right?
Yeah, like when you've had a good move down,
Yeah, very hard to do, and the best traders in the world struggle with this, right? Again, we talked about Portia Jones before. He always used to say he really struggled to capture the meat in the middle of a trend, but he's very good at capturing that turn. And so it's not like this is, you know, easy for anyone. But I would say, given this is going back into a long-term trend that the market was kind of expecting this year, if it's the second go at this collapse, then I think it could be a much more longer-term one. That's all I would say. And again, we don't know ourselves. This is not exactly advice, right? This is an idea set up. You could have a completely different view and want to be buying, and there's certainly reasons for flat price to be potentially bullish, and there's plenty of arguments for that out there as well. But hopefully that's useful, and ultimately it's just a good depiction of a setup for a contrarian trade. So thanks guys for that, and thanks listeners out there. Again, any feedback or things you want answered, don't hesitate. Please leave a comment, like, share, and all that. And be sure to check out the rest of our videos. Thanks guys.